Hello and welcome to Stocks Telegraph, your go-to source for all things related to investing. Whether you're a beginner or an experienced investor, we're here to provide you with valuable insights and information that can help you make informed decisions about your investments. Today, we'll be discussing one of the most important tools in an investor's toolkit, fundamental analysis. This type of analysis involves examining a company's financial and economic data to determine its true value and growth potential. By understanding fundamental analysis, you can gain a deeper understanding of a company's financial health and make better informed investment decisions. We'll be discussing the key components of fundamental analysis, including financial statements, earnings reports, and other data sources. By the end of this video, you'll have a better understanding of how to evaluate a company's potential and make informed investment decisions. So, let's dive in. Fundamental analysis is a powerful tool that investors use to evaluate the intrinsic value of a company. This method involves analyzing a company's financial and economic data to determine its current and future growth potential. By understanding the key factors that impact a company's success, investors can gain valuable insights into its true value and make informed investment decisions. The first step in fundamental analysis is to examine a company's financial statements, including its balance sheet, income statement, and cash flow statement. These documents provide important information about a company's revenue, profits, assets, liabilities, and cash flow. By analyzing these statements, investors can determine whether a company is financially stable, profitable, and well-positioned for future growth. In addition to financial statements, investors also analyze earnings reports, which provide detailed information about a company's quarterly or annual earnings. Earnings reports can help investors evaluate a company's profitability, growth potential, and overall financial health. For example, investors may examine a company's earnings per share to determine its profitability, or its revenue growth rate to assess its growth potential. Other important data sources that investors consider in fundamental analysis include industry trends, competitor analysis, and economic indicators. By analyzing these data sources, investors can gain a deeper understanding of a company's competitive position, market share, and growth prospects. Overall, fundamental analysis is a critical tool for investors who want to evaluate a company's potential and make informed investment decisions. By understanding a company's financial and economic data, as well as broader market trends and indicators, investors can gain valuable insights into its true value and growth potential. One of the key steps in conducting a fundamental analysis is to examine a company's financial statements. Financial statements provide investors with a comprehensive view of a company's financial health and performance over a period of time, typically a quarter or a year. They include three key documents: the balance sheet, the income statement, and the cash flow statement. The balance sheet provides a snapshot of a company's financial position at a specific point in time. It includes a company's assets, liabilities, and equity. Assets are things that a company owns, such as cash, inventory, and property. Liabilities are debts that a company owes to others, such as loans or accounts payable. Equity is the value of a company's assets minus its liabilities, and represents the portion of the company that belongs to shareholders. The income statement provides information about a company's revenue, expenses, and profits over a specific period of time. It shows how much money a company made from its operations, as well as any gains or losses from investments, interest, or taxes. The cash flow statement provides information about how a company generates and uses cash over a specific period of time. It includes information on a company's operating cash flow, investing cash flow, and financing cash flow. By analyzing these financial statements, investors can gain insights into a company's financial health, profitability, liquidity, and overall financial stability. For example, investors may look at a company's revenue growth rate to determine its growth potential, or examine its debt-to-equity ratio to evaluate its financial risk. Overall, analyzing a company's financial statements is a critical step in conducting a fundamental analysis, and provides investors with a solid foundation for evaluating a company's potential, and making informed investment decisions. Earnings reports are a crucial component of fundamental analysis, as they provide investors with detailed information about a company's financial performance. These reports typically include a breakdown of a company's revenue and expenses, as well as its net income or earnings per share. Earnings reports are usually released on a quarterly basis, although some companies may also issue annual reports. To analyze an earnings report, investors should first review the top-line revenue and bottom-line net income figures. These numbers provide a snapshot of the company's overall financial performance during the reporting period. Investors should also examine the company's expenses, paying close attention to any unusual or unexpected changes. In particular, investors should look for signs of cost-cutting measures or changes in the company's capital expenditures. In addition to these figures, earnings reports also provide other important information. For example, companies may provide guidance or projections for future earnings, as well as details about any major upcoming projects or initiatives. Investors should also pay attention to any commentary or explanations provided by the company's management regarding the results of the earnings report. By analyzing earnings reports over time, investors can track a company's financial performance, and identify trends that may impact its future earnings potential. For example, if a company consistently reports increasing revenue and profits over several quarters or years, this may be a sign of strong growth potential. On the other hand, if a company's earnings reports show declining revenue or profits, this could be a warning sign that the company is struggling or facing challenges in its industry. Overall, analyzing earnings reports is an essential part of conducting a comprehensive fundamental analysis of a company's potential. By carefully reviewing these reports and considering other key factors, investors can gain a deeper understanding of a company's financial health, and make informed decisions about whether to invest in its stock. Apart from financial statements and earnings reports, fundamental analysis also involves examining other data sources to evaluate a company's potential. Industry reports are an important source of data that can provide insights into a company's competitors, and the overall health of the industry. These reports may include information on market share, industry trends, and new products or services. By analyzing industry reports, investors can gain a better understanding of a company's position within its industry and its potential for growth. Economic indicators are also an important source of data for fundamental analysis. These indicators, such as GDP and inflation rates, provide information on the broader economic environment, and how it may impact a company's performance. For example, a high GDP growth rate may indicate a favorable economic environment for a company to grow its business, while high inflation rates may increase a company's costs and lower its profitability. In addition, news articles can provide valuable information about a company's operations, management, and strategic plans. For instance, news articles may report on a company's product launches, mergers and acquisitions, management changes, or legal issues. By staying up to date on news articles related to a company, investors can gain insights into its future prospects and potential risks. Overall, using a variety of data sources in fundamental analysis can provide a more complete picture of a company's potential. By analyzing financial statements, earnings reports, industry reports, economic indicators, and news articles, investors can make informed decisions about whether to invest in a company's stock. Fundamental analysis is an essential tool for evaluating a company's potential, and making informed investment decisions. By examining financial statements, earnings reports, and other data, investors can gain insights into a company's financial health, growth potential, and overall value. We hope you found this video helpful and informative. If you have any questions or comments, please leave them in the comment section below. Also, don't forget to check out our website, stockstelegraph.com, for more valuable insights into the world of investing. Thank you for watching and we'll see you in the next video.